Introduction, Wealth Creation and the Value Equation. In this report, you will explore the mechanisms behind rapid wealth creation, starting with the foundational concept of value creation. Understanding the components of value, risk, and how to manipulate these factors in business is essential for financial success. The journey begins with a shift in perspective, recognizing that the most profitable businesses are not those that sell based on price, but rather those that maximize value for customers while minimizing risk and time investment. The key to creating substantial wealth quickly lies in recognizing that business success is not about pricing products according to their cost but positioning them based on the value they deliver. By mastering this concept, you can begin to command higher prices and, consequently, higher profits. Footnote: The value equation is essential for positioning products and services in a way that maximizes profit by aligning with customer desires and minimizing perceived risk. 1. Understanding the value equation. The value equation is composed of 4 key components: dream outcome, perceived likelihood of achievement, time, and effort. These components work together to shape a customer's decision-making process. The first component, the dream outcome, is the ultimate goal that the customer seeks, such as financial success or personal satisfaction. The perceived likelihood of achievement reflects the risk associated with the purchase, how likely the customer is to achieve their desired outcome. The time factor examines how long it will take to achieve the result, and the effort component looks at how much work is required from the customer. Understanding these factors allows you to manipulate them in your favor, creating offerings that seem both risk-free and quick, while reducing the effort required on the customer's part. By positioning your product as a high-value solution to a customer's problem, you can command premium prices and achieve higher profitability. Footnote: The 4 components of the value equation, dream outcome, perceived likelihood of achievement, time, and effort, determine how customers perceive value and influence their willingness to pay. 2. Price as the lever for profit. The price of your product is the most significant lever in determining your business's profit. The pricing strategy you adopt must reflect the true value your product provides to customers. For example, by repositioning a simple product, like a table, you can increase its perceived value by emphasizing the emotional or status-related benefits it provides, such as impressing guests at a dinner party. This approach significantly increases the product's selling price, even if the intrinsic cost of the item remains relatively low. When you position your offering based on value rather than cost, you can create a much higher margin, leading to increased profits. The key is to understand what your customer values most and structure your pricing accordingly, thus increasing both perceived value and profit margins. Footnote: By positioning your product based on value rather than cost, you can significantly increase your profit margins and command higher prices in the market. 3. Accelerating cash flow with fast cash conversion cycles. To create wealth rapidly, it is crucial to understand the importance of cash flow and the role of a fast cash conversion cycle. This cycle involves generating revenue quickly and efficiently by ensuring that customer payments are collected promptly. The faster you can convert sales into cash, the quicker you can reinvest that money to grow your business. In practice, this means structuring your business model in a way that allows customers to finance your customer acquisition costs. For example, by securing upfront payments or offering incentives for early payments, you can reduce the time it takes to recoup your customer acquisition costs and reinvest that cash into further growth. This approach eliminates the need for external financing, allowing you to scale without capital constraints. Footnote: A fast cash conversion cycle allows businesses to reinvest profits quickly, accelerating growth and reducing the reliance on external financing. 4. Wealth alchemy, turning customers into permanent assets. Wealth creation at scale involves understanding the concept of permanent customers, those who stay with your business long-term and contribute to ongoing revenue. These permanent customers are invaluable because they create a stable foundation for growth. Unlike businesses that constantly have to acquire new customers, businesses with permanent customers can rely on consistent cash flow over time. By focusing on retaining customers and ensuring they continue to derive value from your offerings, you can transform customer acquisition costs into long-term assets. The key is not only to acquire customers but to retain them, thus increasing the lifetime value, LTV, of each customer. This strategy directly contributes to the growth in enterprise value, making your business significantly more valuable to potential investors or buyers. Footnote: turning customers into permanent assets through retention strategies increases the lifetime value, LTV, of each customer, enhancing overall business valuation. 5. Leveraging wealth alchemy for business growth. Wealth alchemy refers to the process of creating exponential growth by leveraging the value you offer to customers and the financial strategies you employ. This concept is particularly powerful in industries with high customer retention rates, where recurring revenue streams provide a stable base for expansion. By focusing on the long-term value you provide, rather than short-term profits, you can create a business model that thrives and scales without the constant need for additional capital investment. The ultimate goal is to build a business that generates significant profits with minimal external investment. This is accomplished by optimizing customer acquisition, retention, and monetization strategies to maximize the value derived from each customer interaction. Footnote: wealth alchemy involves leveraging customer value, retention, and strategic financial management to create exponential growth and reduce reliance on external capital.